Hi, Jimmy.
Hi, good
We
afternoon,
are
Ivan.
live. Okay. So, how's your Sunday so far?
Good. It's Thanksgiving Sunday.
Wow, nice. Okay, so good afternoon, everyone. This is Investing Bro Market Talk episode 13. Hopefully, you know us by now. So, we have been sharing on a weekly basis, or at least a bi weekly basis, on the latest market happening. Today, we actually want to talk about a new REIT on the block. No, new kid, a new REIT on block, a Daiwa House Logistic Trust. Can buy, cannot buy. Hey, so Jimmy, do you actually subscribe for the IPO?
No, I didn't.
Okay. Not too late. Actually, I didn't as well because I expect this to happen. So anyway, let's not waste time and let's get into it now. Let me share my screen. Okay, here we go. So for those who don't know what has happened, so recently there is a new REIT that was listed. As you can see, my screen is called Daiwa House Logistic Trust. Okay, listed on 26th November, which is just a Friday, and it's offered price of 80 cents. 80 cents. Okay. And based on the Friday closing price, the price hasn't changed at all. So for those who actually missed the IPO, it's still not too late. If you are interested in this REIT, you can actually take a look. So today I just want to share with you how I analyze a REIT, especially when I IPO, or put it simply, how do you actually read a prospectus? So of course, be it stocks, be it REIT that got listed, right? They will actually issue this prospectus with tons of information, sometimes too much. So what are the important information you want to take notice of to help you make sound investment decision? And of course, how do I actually get this document? Okay, maybe I just share very quickly. You can go to sgx.com. Okay, you mouse over securities, company information, IPO prospectus. So this is where you can download the prospectus. Okay, now let me just get to it. So the good thing about prospectus here is this, all the important information, I would say easily 70 to 80% of them is already at the front few pages of the prospectus. So if you can bother to read the front few pages, I think it's enough for you to make some investment decision. So now here is the thing. I am playing the role of a retail investor today. Okay, with this new REIT, should I buy or not, invest or not? I hope through this video, you can have a better understanding of my thinking process. So first page, what caught my attention is, of course, please understand what REIT you are buying. So in this case, we are buying a logistic REIT. Okay, so they are warehouses, they're not factories. So personally, I'm quite a fan of logistics. I believe logistics, they have a lot of rooms to grow with all the e-commerce happening. I actually see a lot of huge potential for logistics. So yes, I'm a fan of logistics. So that's one plus point. Next, as you can see here, 6.5% distribution yield. So is this yield attractive enough, good enough? So what we will do is we actually want to compare with similar REITs that are already listed. So to me, this is what I do. I go to REITdata.com. You can sort the REITs by the dividend yield, and let's take a look. If you ask me what are some of the comparable one, like for example, you have about EC World. Okay, also logistic REIT give about 7%. You have ESR. Yes, it's industrial, but they are usually put in the same category, 6.4. You have ARA Logistics, obviously Logistics 5.2. You have Maple Tree Industrial 4.9 and Maple Tree Logistics 4. So you can see that basically currently the listed REITs is actually in a range of 4 to 7. So giving a 6.5 dividend yield, if you ask me, is actually not too bad. Not too bad. I would say it's fair. If you want to argue it as an attractive price, I think that's quite good also. So to me, at this price range of 80 cents and get 6.5 yield, I think it's a fair price. Or you can even argue that it's slightly undervalued. So that's the first thing I actually get from this information here. Okay, so let's move on. The second thing you may want to find is about the sponsor. So sponsor is actually Daiwa House. So basically, sponsor is the one that formed the REITs. I'm not very familiar with Japanese real estate, but based on this paragraph here, okay, Daiwa House is one of the largest construction and real estate developer company in Japan. So I think that worth something. That worth something. So yes, I'm happy that they actually have a strong sponsor. Okay. Let's see what other information that I actually see here. So this is the information about some of the properties. Not very important to me, to be very frank. Yeah, this page is actually quite important to me. I would need to know where are the properties. So basically, all the properties, at least at IPO, is actually in Japan. If you ask me, I'm quite happy with that. I think Japan properties, they're actually quite steady, quite stable. You don't see a lot of very huge fluctuation in the prices and in a lot of tenant movement. So I'm actually quite happy with Japan. 7.2 years, which is quite a long WALI. What's a WALI? Weighted average lease expiry. That means their tenants, on average, they'll be there for the next 7 years. So it's actually quite long. Okay, so for logistics, actually quite long. If you talk about for retail, you can have it like 1 or 2 years. Office, same thing. So WALI of 7 years is quite long. So if you are looking for a stable dividend, stable income source, the longer is the better. So this is a plus point. 3.7 years of portfolio age. Again, this is quite a plus point to me. That means the properties are actually quite new. Okay, I of course, as a property investor, I would love newer properties. Occupancy of 96.3%. So to me, this is actually a very impressive. Anything more than 95% is considered impressive for me. I would accept anything that's more than 90%. So this is definitely a plus point. So the rest, not so important for me. And let me just move on. Okay, so on this page, what looks interesting to me is this point, whereby, whether the property sits on land, is it on freehold, or the tenure of the land that it sits on. Very happy that, about 48.3% are freehold property. Okay. What the thing that that I don't like, and is actually considered quite a significant negative point for me, is that you have 7.8% of the properties, which is less than 20 years. Okay, less than 20 years. That is actually quite short. That's quite short. So just to give you a sense, like for example, for those logistic properties in Singapore, okay, the land tenure is about 30 years. Land about 30 years. So you have 7.8%, which is less than 20 years. This is one significant negative point for me. But of course, as in all things in life, you cannot just write off this REIT because you have one negative point. But let's see, this is something you can take off. If not, you have about, okay, as per what they say, 48 plus 36, almost 75% have more than 40 years. From that perspective, it's actually not too bad. Jimmy, you have a comment on this, right? You want to talk about this?
Yes. Obviously, from my perspective of looking at all these logistic property, is to look at the tenant profile. Perhaps you would like to show what is the mentioned tenant profile in this.
Sure, I can actually do a 5. Okay, top 5 tenant. Okay. Okay, so you're referring to this page, right?
Yes, I do. Yes. So okay, so in this case, this top 5 tenants written in the perspective that gave the financial year 2020 NPI. NPI stands for net property income. Mitsubishi Shujin actually contribute 20.3%, and this is basically TSE Japan listed company, and the other one is Century Logistic, which is also one of the bigger F&B distributors in Japan as well. If you remember the hibiki whiskey, and that sort of drinks, that's basically from Century.
Must be alcohol related for you.
Yeah, something that familiar names, right? Then of course Nippon Express. I mean, if you've been to Japan, you will see a lot of Nippon Express logistic van, traveling along the streets. So again, this is a TSE, this is a company. Tenant A did not mention, so I do not know what does that mean. The last one, I'm not familiar with the company. But then again, you see, if you add up all these listed company, they actually form quite a big percentage of contributions to the NPR. So 20 plus 8, 28. 30, about 40% going forward with this. So the portfolio tenants itself, you can see further down the prospectus, you can see that the third-party logistic contributes 72%. So I think that's a big one. Then the rest will be the smaller player like e-commerce, retails, manufacturing, and of course you have some vacancies over there. I think overall the tenant profile are quite mixed. But then again, you have 40% of the NPI is being contributed by listed company, and they seems to be staying there for long as well. So that's pretty a good tenant profile in my opinion. Yeah.
Okay, so that is something you like to see in your REITs portfolio, I suppose.
This would become one of my one of the criteria that I would screen through the tenants. Yeah.
Okay, great. Thanks for input, Jimmy. Okay, so let me continue. So like I said, the front few pages will actually help us to give a very good view. Okay, this is where we stopped just now. And yep, okay. The other thing is about the growth plan, and I'm actually quite happy that this particular REIT, yes, they have very clear growth plans. So they have actually this thing what we call the first right of refusal. That means if let's say the sponsor got new property, they will be offered to this REIT first, and it's actually up to the REIT whether they want to accept or not. So you can see that they have quite a few properties in the pipeline. So yes, we do expect some growth for this REIT. Of course, now they are listed and going forward. And yep, some of these properties may not be in Japan. It will be overseas too. So for those who actually like a diversified portfolio, this is actually going to be a good news for you. Okay, so this is similar. Okay, now, so up to this point, I'm actually quite happy. As you can see that I quite like the portfolio. I quite like the country. I like the occupancy. The only negative point I have pointed out so far is that they probably have now 1 or 2 properties whereby the land tenure is less than 20 years. If not, so far I'm quite happy with it. The last 2 bit of information I need to find out is their credit profile. Okay, so to see whether are they taking too much loan. So to have that answer, I have to look for these 2 ratio. Okay, let me just go. Okay, the one is called leverage ratio. Okay, that is a chart. Let me find the chart for you. So this is usually how I get the information. I just go Control F5 and look at information. Yes, this is the one. If you look at this chart, the long story short here is this after listing. So after there's this post-consumption tax rebate, okay, it will eventually have a leverage of 33.1%. So this is good. Anything less than 40%, I'm very happy about it. So this is a pass for me. And the other ratio I'll be looking at is actually interest cover ratio. Okay, so if you do a find, okay, maybe I should just start from the top. Okay, Control F, interest. Okay, you can see the interest cover ratio is 9.3 times and 10.3. So to me, it's a pass. Anything more than 3 is a pass. Okay, so back to the most important question: buy or don't buy, invest or don't invest. Okay, so this is how I invest in REITs now. I invest in a portfolio perspective, and I do quite close to a dollar cost average. Okay, that means every month I will buy into different REITs, buying them from a long-term perspective. And after that, generate a very steady source of passive income from this portfolio. So if you ask me, yes, I would actually be very happy to include this REIT in my portfolio. Okay, especially at this price, 80 cents, 6.5%. I think I'm even happy to buy this REIT even when, let's say, the yield is probably about probably I think I can go even up to 5.5%, which means to say even at the price I can only get 5.5% yield. Okay, I think I'm still happy. Okay, so if let's say this particular REIT only give less than 5.5% yield, then I think it's expensive. Also at this current price, I can actually get at 6.5% yield, and yet I think yes, I'm very happy to put this REIT in my portfolio. Jimmy, what do you think? Do you have the same conclusion as me?
Well, unfortunately, I have a different opinion from you. So
Okay,
I'm
no
so
problem, definitely.
please allow me to share my opinion. So
Sure.
I feel that 6.5% is quite low, given that today market rate and how the inflation comes in. 6.5% definitely will not meet my especially you're talking about logistic industry, right? So I would be looking at 8% kind of a return that to make me to be attractive in this kind of a REITs itself, and to be in order to have the DPU at 8% or 8% or more, the price has to be go down to about 68 cents or so. So given the fact that right now it's 80 cents, I feel that that's still too expensive to me. So once it goes in between 0.68, which is 68 cents to 70 cents, that will probably hit my target range. After all, invest in REITs is about DPU. So, that basically is my focus and that's my aim. Yeah.
Nice, nice. It's good to have different opinion. So end of the day, like I say, beef you can't say that the chicken chop is the best. Everyone love it. To each his own. So there's actually 对对对 so there's so many investment choice out there. Okay, end of the day, it's never about what is the best, it's about what is the most suitable. So it doesn't mean that, okay, now Jimmy is different. I don't believe. No. Okay, so to each his own. This is my view. I would actually put inside my portfolio. Probably Jimmy has a better option. So yes, that's the fun part about investing. It's never about what is better than the others. Okay, so with that, I think we probably have given some very good information for you to make your investment decision. Anything else you want to add, Jimmy?
That's all, man. Thank you so much, man.
Great. If you think that whatever you shared today makes sense, you learned something from this, do us this little favor. Click on the like button, click on the subscribe button so that we are motivated to do more of such video to share our insights and analysis on the latest investment happenings. Okay, with that, take care of yourself. I hope to see you again next week. Bye, everybody.